Good morning, traders. Welcome to the morning update. My name is Marco, and today is Wednesday, the 1st of March. First things first, wishing you all a fantastic trading month for the month ahead. And secondly, how is your February? Let us know. Uh, did you stick to your rules? Were you disciplined? Um, were you active in the market? Are you finding market conditions quite tricky at the minute? It'd be really interesting to know what you're actually experiencing out there and if we can help in any way. Okay, so what happened in the market overnight and anything to look at for the day ahead? Well, the three major talking points that have already come in were the GDP quarter on quarter for the Australian economy, the Caixin Manufacturing Purchasing Managers Index from China that came in at 145, and then of course President Trump spoke at 2 a.m. Well, with the Australian economy, they're in a transition period at the minute. Uh, their forecast was zero point 0.7, but it came in at 1.1. And if you look into the numbers, it was quite evenly spread across many industries, zero point 0.2 points across 5 industries, and then the rest was made up. Now, what you'll find is that Australia have been going through a transition period in how they're actually retaining, or I should say, making their economy grow. Primarily, it used to be revolved around the mining industry, and the transition period is now through tourism and education. So they're not just solely reliant on exports of rare earth minerals, iron ore, coal, copper, that kind of material. So when we look at this, the one thing that they're avoiding is being solely reliant on one market. But now, because their economy is growing on the back of other markets that are more susceptible to the strength of the currency, i.e., fluctuations in the Australian strength. So tourism, obviously, education, that's affected by the strength of the Australian dollar. So what happened is they've kept the Australian rates at 1.5%, and they've succeeded in growing their economy this quarter better than expected, and their forecast for this year is a 3% growth. They're currently at 2.5%, so everything is looking pretty rosy for Australia. However, they are susceptible to varying external factors such as obviously China, weather conditions for exports, and then obviously in terms of mining, you've got the fluctuations in the US dollar that potentially affect iron ore prices, coal prices, copper prices. Then if we look at the Caixin Manufacturing Purchasing Managers Index, anything over 50 here is described as expansion for the economy. This index is primarily made up of just over 400 purchasing managers that discuss the health of the business industry, i.e., employment, new orders, manufacturing, this kind of thing. And as you can see, it's coming better than expected. So according to the Chinese economy, PMI numbers are a lot better than expected. This is obviously a bullish factor for the Australasian markets. So Australia, New Zealand, that's good for them. And then we've back to the Trumponics. Mr. Donald Trump spoke at 2 a.m. I didn't listen and I didn't hear his speech to Congress, but after reading, it sounds like that he was again full of legislation and tax cuts. However, it lacked real detail. I'm sure that the detail will be being worked on in the background, but this is something that he avoided to make too much comment on. Now, when we look at the detail or the way the market has reacted, we're still seeing dollar strength, and that's probably down to multiple FOMC members talking up the dollar, and now obviously Trump speaking about certain effects that are going to come into the market. I think the key driver this week now will be dependent on what Miss Yellen says on Friday. If we get a hawkish tone from the normal dovish Yellen, then maybe a March rate hike could actually surprise us all. There has been an increase in economists factoring in a potential rate hike in March. So this has been rising steadily over the last week or so. So this could be interesting. Fundamentally, it's what we're all looking for, because then we've got fundamentals and technicals all in line. We've got the US dollar potentially 2 to 3 rate hikes this year, and then technically speaking, there's a lot of markets that are all set up for the dollar strength. So let's see what happens. This could be fantastic. We could start seeing a year of trend here, but listen, we're not going to count our chickens before they're hatched. Moving on, we've got a busy day in news. We've then got GBP manufacturing PMI forecasting at 55.7. I think a miss here, and we'll see a big sell-off in sterling. So watch out for that number. There could be some nice intraday trading opportunities. We're going to look at the markets in a minute. Then at 3 p.m. we've got Bank of Canada rate statement. Are they going to hold rates at 0.5? Well, if you look at the Canadian currency markets yesterday, Canada had a huge sell-off yesterday, so whether it was on the back of oil, although oil rebounded and the Canadian dollar didn't, so maybe something a little bit untoward there. Next bit of news, we've got ISM manufacturing from the US expected at 56.2, and then what a way to finish. Crude oil inventories at 330, and then RBNZ, Governor Wheeler speaking on the New Zealand dollar. So it's a real jam-packed news day today, so just be careful, guys. Don't jump into the markets. Look at take the right trades and stick to your rules. So the dollar index, as we highlighted a couple of weeks ago, potentially a head and shoulders was forming. You can see the two grey boxes. However, the market came down, formed a higher low, and it's pushing on now. So any breakthrough these highs here, and we're going to be resurgent back to the dollar uptrend, and we'd expect the 103s, 103.50s on the dollar index to be met. Therefore, look at selling euro, look at buying dollar yen, that kind of thing. There'll be the markets to trade. Dollar yen's just bounced off a key level as well. Selling gold and silver would be ideal as well. So let's have a look. Here we go. And you'll see it's a similar picture here. So one of our primary rules, and it's a very simple rule to remember, will be never sell into support and never buy into resistance. So if we look here at the tweezer top formed on the on the euro, this was after it broke out of a 4-hour wedge here. It looked like we were going to see some euro momentum to the upside, but it's failed. We hit target 1 through here to the upside, and now it's coming back down. Key level here is around the 105.30 to 105.100. We get a break below this, then we'll be looking to get short. We can see the lows of 2016 tested. So real good opportunity here on the euro. Never like to sell into support, because we can see, even if it is a good trading opportunity, you can see that price reacts to this level and it bounces. There's a very good probability price is going to react with the level and bounce again. So rather than waiting for it to bounce, let it break, and then we'll use it to sell. So dollar yen came right into our support zone. You can see the grey box, the grey shaded area. Yesterday we had big reversal off this level here. Look at the way it closed. Big bullish engulfing bar. Took out the low of the previous day. Closed above the close of the previous day, and we're moving north. Now, opportunity here, I think basically if we do get any chance, just buy any pullbacks. This market should touch 114.80 to 115, I would have thought, in a heartbeat, and then at 115.50s we'll see whether we're going to break through and head up towards the 118 barrier. Just remember though, if we are going to get a bullish statement from the Fed on Friday, Miss Yellen, we'll probably see that 118, 117 anyway touched pretty quickly. Sterling on the flip side, it broke out of its symmetrical triangles. You can see here highlighted in blue. You can see false break. The reason I put false break is because we have a set of rules that stipulates if it breaks out, we want to see another candle take out the high and close above before we look at trading it intraday. You're fine to get through, but if you're looking for this move as a daily move to continue up to resistance, then we'd need to see a little bit more than just one candle break. So we've had the false break, no follow through. Ultimately 123.50, 123.40 is proving a difficult level. There's a lot of demand for buying of cable at this level, and we can see that on this last candle here that just came in and it shot off. literally it's come down to the pip again, and it's stuttering. So I think a break and close below 123.40, 123.50, and we're going to see further downside. Okay, so moving across to Australian dollar, this is the weekly chart, and even after the good news last night on the Australian dollar, you can see that it did move a little bit, but the weekly candle is still showing as bearish. We break and close below last week's shooting star. We'll see further downside on Aussie dollar. It is at key resistance. However, I think there's better opportunities potentially than shorting Aussie dollar, just because this appears to be one of the stronger markets and doesn't seem to be giving up too much ground against the US dollar. So you'd be looking at other markets that would potentially give up more ground. So if the euro does break that 105 barrier, then I would suspect that the euro is going to hit the lows of 2016 faster than this is going to break. However, remember, if this does break and it starts to give way, we'll see Aussie dollar do that across multiple currencies. So we can be adaptable according to current market conditions. Just be aware of what is happening on each market. Dollar CAD, this is our long-term channel. We saw it break out, and then it was stuck in a range at between 1.3 and 132. Yesterday, I did take a cheeky intraday short from 132, and as you can see, it wasn't very successful. I was trading the range. As you can see, there was a nice range formed through here, 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 and then it came back down. Thoughts were it was going to run to the upside, but I was only looking for intraday targets. And like I said, we're always open and honest here about what trades we're taking, so I can't just talk about winning trades. This was a trade that I thought was going to give us at least a 2-to-1 on an intraday basis. Okay, so looking at gold, well, if we are going to see the continued strength in dollar, then expect to see a sell-off in the precious metals. The precious metals, or I should say especially in gold, this is what you look at as a safe haven. So when there's no direction, no clarity in the market, people turn to safe havens and look for capital growth, because they don't actually pay them a yield or a dividend or anything, but gold is a safe haven, so they just look for capital appreciation. So here what we'll be looking for is a break of this channel. We were initially looking for shorts around 1250, but as you can see, we got a breakthrough, potentially a false break. We can see the momentum is losing force, because if you look at this leg up here and this leg up here, the momentum to the upside is waning. It's not as strong as it was. So pull back. I'd like to see a break come close below this trend line and then a retest at 1250 to get short. However, if that isn't the case, if we don't get the pullback, then I'll look for alternative methods that we have here. Okay, so I think that's it for the charts now. We have another free trading event, so if there are new traders in and around the London area, or you want to travel over to London on Wednesday the 15th of March, we've got a free trading event, and you can register that at Eventbrite, or you can go to info@phoenixblue.co.uk, drop us an email, tell us you'd like to attend the event, and what we'll do is we'll get back in contact with you and tell you that you've reserved your seat. Okay, people from Sweden, we are coming to Stockholm the 11th of March, one day, full free training at the Grand Hotel. If you haven't yet registered, please do so. It's going to be a great day. It is free. We'll send links on how to open up brokerage accounts, because we want you to have an account opened and ready so that you can participate in understanding technical analysis on the day and orientation of our broker. Okay, so that's it for today. Have a great trading month. Stay disciplined, and we'll speak tomorrow. Bye-bye.